Hello guys, welcome to our channel. Today in this video, we will discuss the important news of the SEC versus Ripple lawsuit and what is the secret move of Ripple that can end the case. But before we start, make sure to give this channel a big thumbs up, and if you are new to the channel, don't forget to subscribe before leaving. Also, hit that bell icon so that you can get notified whenever we will upload a new video. For now, let's get back to the video straight away. Ripple has requested the court to prepare for an upcoming motion to compel regarding the fourth set of requests for admission, RFAs, as Ripple and the SEC have reached an impasse. The specific dispute is not mentioned in the letter, but in Q4 2021, the court ordered the SEC to respond to Ripple's interrogatories seeking to establish the authenticity or genuineness of a document, the ones relating to the fair notice defense and the ones about Ripple's extraterritorial defense. The ones relating to the fair notice defense would be waived if the judge had granted the SEC's motion to strike the fair notice defense, which she didn't. Defendants intend to file a letter motion to compel, and the parties have agreed to the following proposed schedule and page limits with respect to the motion. Defendant's motion would not exceed 7 pages. The SEC's letter in opposition to defendant's motion would not exceed 7 pages and would be filed within 10 business days of the motion. Defendant's reply in further support of the motion would not exceed 4 pages and would be filed within 7 business days of the SEC's opposition. With respect to page limits, defendants believe that a combined motion of 7 pages or fewer, which is below the 5-page per party limit provided by Section 2C of the court's individual practices in civil cases, will permit the court to fully consider the factual basis and legal issues raised in the motion and serve the interest of judicial economy and efficiency, said the letter. SEC will be forced to admit case is circumstantial. The SEC is required to file hundreds of answers to Ripple's RFAs on many fronts, from XRP sales offshore to questions relating to the fair notice defense and whether the XRP ledger was fully functional when the sales took place in 2013. Late last year, the Orlando-based Hogan attorneys Jeremy and Thien-Vu provided some key insights into the RFA topic after the judge found the interrogatories relevant to the case. This was a clear win for Ripple as the SEC's case is increasingly viewed as circumstantial. The SEC is going to be forced to argue that Ripple marketed to retail purchasers as though there was an investment contract. The SEC either has to admit there is nothing in writing that forms an investment contract and therefore admit that the case is circumstantial, or it can go through each and every contract and try and find something in the contract that somehow ties Ripple to people who bought XRP on Coinbase last year. The legal expert's instinct is that the plaintiff won't go down that road and will concede it is bringing a marketing case. But much like in a murder case with no hard evidence such as fingerprints or eyewitnesses, you can win the case, but it isn't the easiest way to win. On Tuesday, XRP rose by 3.58%, partially reversing a 5.68 loss from Monday. XRP ended the day at 43 cents. The upside came in spite of the SEC versus Ripple case moving into a pivotal week for both sides. In recent weeks, court motions and rulings in the SEC versus Ripple case have provided XRP with little price support. XRP last tested resistance at 45 cents on May 15th, with a day high of 44 cents before the latest pullback to sub 42 cents levels. While several motions have gone Ripple's way, the SEC remains well placed and continues in its attempts to shield William Hinman's 2018 speech-related documents and emails. In a 2018 speech, Hinman said that Bitcoin and Ethereum are not securities. William Hinman, former SEC Director of the Division of Corporation Finance, remains a central figure in the SEC versus Ripple case. XRP price action. XRP was down 2.24% to 42 cents. A mixed start to the day saw XRP rise to an early morning of 44 cents before sliding to a low of 42 cents. Technical indicators. XRP will need to move through the 43-cent pivot to target the first major resistance level at 44 cents. XRP would need broader crypto market support to break out from the morning high of 44 cents. In the event of an extended rally, XRP should test the second major resistance level at 45 cents. The third major resistance level sits at 47 cents. Failure to move through the pivot at 43 cents would bring the first major support level to 42 cents into play. Barring another extended sell-off throughout the day, XRP should avoid the sub 40 cents. The second major support level at 40 cents should limit the downside. The EMAs and the 4-hourly candlestick chart send a bearish signal. XRP sits below the 50-day EMA, currently at 45 cents. This morning, the 50-day EMA pulled back from the 100-day EMA. The 100-day EMA also pulled back from the 200-day EMA, XRP negative. A move through the 50-day EMA would support a return to 50 cents. While sentiment from the broader crypto market will influence, this week's SEC submission and any court ruling will be the key drivers. A series of grim earning reports from the US retailers, which most recently saw Target drop over 20% on Wednesday, have put fear about US and global growth and inflation back in the limelight. As a result, Wednesday was the worst day for the US stock market since June 2020, with the S&P 500 dropping over 4% and the Nasdaq 100 dropping over 5%. Given the close close correlation to US stocks, Wednesday was also an ugly day for crypto, with the total market capitalization falling about 6.5% to around $1.21 trillion from above $1.30 trillion. Stagflationary signals coming from major US retailers, Walmart and Home Depot, also reported earnings this week, have negated this week's stronger than anticipated US retail sales report for April, and come against the backdrop of a Fed and other major global central banks that remains intent on continuing to tighten monetary policy aggressively. Traders will recall remarks from Fed Chair Jerome Powell on Tuesday, where he emphasized that the Fed's top priority is inflation fighting, even if that means slower growth, and as a result, the Fed will not hesitate to take rates above the so-called neutral level of around 2.5% if required. Other Fed policymakers speaking that week have largely signaled the same message. Expectations for slower growth, meaning weaker earnings, coupled with expectations for higher interest rates, meaning a higher discount rate, squeeze equity valuations from both directions. Many analysts are unsurprised that the bounce in the US stocks earlier in the week proved to be short-lived. In Thursday pre-market trade, US equity index futures are extending on Wednesday's losses and look likely to break out to fresh annual lows before the week is out. Crypto is holding up a little better for now, with the total market cap for now consolidating around the $1.225 trillion mark and slightly in the green on the day. Tier 2 US data in the form of the May Philadelphia Manufacturing Survey, the weekly initial jobless claims report, and April existing home sales probably won't move markets much, with focus set to remain on the overarching themes of slowing growth, inflation, and central bank tightening. Expect cryptocurrencies to continue taking their cue from stocks, and if that is the case, be prepared for further downside. A break below support at $1.20 trillion could see the crypto market cap drop back towards annual lows under $1.1 trillion. Crypto price action. Bitcoin fell nearly 6% on Wednesday in tandem with the downside in equities, dropping from the upper 30,000s to the mid 28,000s. However, despite continued US equity downside in pre-market trade, Bitcoin is stabilized in the $29,000 area and remains a good 14% above last week's sub-26,000 lows, unlike S&P 500 futures, which are only a whisker above last week's lows. If Bitcoin can continue to consolidate around the $30,000 level, as has been the case over the past 6 or so sessions, despite a breakout to fresh annual lows in US equities, that would be impressive. But the aforementioned negative themes of growth and central bank tightening fears suggest that it remains too soon to bet on a substantial Bitcoin rebound. At current levels, Bitcoin has a market cap of around $550 billion, giving it a market dominance of around 45%, up from 44.5% on Wednesday. In times of market turmoil, Bitcoin's market dominance tends to expand given its status as the largest, most durable cryptocurrency. Ethereum, meanwhile, dropped closer to 9% on Wednesday, from around 2,100 per token to around 1,900 per token. At present, the second largest cryptocurrency by market cap is trading a tad higher on the day in the low 1900s, but also remains vulnerable to further US equity market downside. At current levels, Ethereum has a market cap of around $230 billion, giving it a crypto market dominance of around 19%, down from 19.4% on Wednesday. Non-stablecoin altcoins unsurprisingly underperformed versus Bitcoin on Wednesday. Of the majors, Ripple's XRP dropped around 7.5% on Wednesday and is a further more than 1% lower on Thursday. Solana's SOL dropped 12.5% on Wednesday and is down nearly 2% more on Thursday. Binance's BNB was down 6% on Wednesday, though has since bounced about 2.5% on Thursday. Cardano's ADA lost about 12.5% on Wednesday and is flat on Thursday. DeFi. The total value locked, TVL, of the entire decentralized finance space dropped by about $4.0 billion on Wednesday to around $98 billion, which is unsurprising really given the resoundingly risk-off broader market conditions. Even though various DeFi protocols offer attractive yields on various stablecoins, which are supposed to be immune to broader market conditions, investing in DeFi is still seen as highly speculative. This is even more so the case in wake of last week's UST and Luna crash. At the start of 2022, the TVL of the total DeFi space was well above $200 billion. Amid the broader risk-off conditions in crypto and financial markets, it is difficult to imagine flows returning anytime soon. In other notable DeFi news, early voting indicates majority support within the Terra community, validators, for founder Do Kwon's proposed fork. The fork, which could happen as soon as 27th of May, would see the creation of a new Terra blockchain alongside the original one. The new blockchain will scrap the UST stablecoin. The old Terra blockchain will be called Terra Classic and governed by the native token Luna Classic. Luna's market cap has fallen back under $1.0 billion as voting proceeds. UST/USD, meanwhile, continues to trade below the 10-cent level. That's it for today, guys. We will see you next time. Until then.